After all the planning, waiting, and analysis, your trade setup only manages to deliver a 1 arrow or a 2 arrow move. Please don't get me wrong though. A 1:2 risk to reward ratio isn't bad. But did you know that cashing a 5 arrow, 10 arrow, or even 20 arrow trade setups is actually easier than most traders think? Is that something that you would like to achieve consistently? Well, in this 5-part video series, I'll walk you through step by step a trading system that can help you identify and capture high risk to reward trading opportunities with confidence. So let's dive in. Many traders fail not because they don't have a trading system, but because they don't have a good trading system. I mean, a complete trading system. So you may ask, what makes a good trading system? A successful trading system should have 5 key elements. Number 1, a clear higher time frame bias or market direction. Number 2, a precise entry level. Number 3, a lower time frame confirmation is part of a trading system. And then number 4, you need to have confluences into your trading setup. And number 5, you need to couple that with proper risk management and a trading psychology. Now, if your trading system lacks the first 3 elements of this list, even if you become very good at the last 2, you will likely continue to struggle in the market. So that is why I'm excited to introduce a complete trading system to you in this video series. The strategy is called Malaysian Support and Resistance, or MSNR. Now, as the name suggests, it originated from Malaysian traders, and it has gained popularity because of its simplicity and its effectiveness. And what makes this strategy unique is that it combines the first 3 essential elements, as we've highlighted above, of a successful trading system. It has compressed them by using only 2 powerful concepts. The first concept is key levels. Number 2, storyline. Now, if you can master these 2 concepts, key levels and storyline, then you'll be able to trade the Malaysian way. So in part 1 of this series, we'll focus on the concept of key levels. So what exactly are key levels? According to Malaysian traders, key levels are specific turning points in the market that serve as points of interest. These levels can provide high probability trading opportunities when price returns to them. Although they may look similar to the traditional support and resistance levels, they are defined differently and are used in a more structured way. And so let's look at the different types of key levels that are available in the Malaysian strategy. The first type is what we call the A-shaped key level. It is also known as the classic resistance key level. So how does this key level form? It forms when a bullish candle is immediately followed by a bearish candle. And so we take our line and mark the opening price of the first candle, which is the bullish candle. That price level becomes the key level. And so if you switch to a line chart, you'll notice that this formation resembles the letter A, which is where the name comes from. A-shaped key level. Before we continue, there are two important things to remember. First, all key levels are formed by a combination of a bullish and a bearish candle. Second, when drawing key levels, we focus primarily on their opening prices. Take note of that point. It is very important. So keep them in mind as we move forward. Now, let's look at the second type of key level, the V-shaped key level. This key level is simply the opposite of the A-shaped key level. Or how does it form? It forms when a bearish candle is followed by a bullish candle. And so if you switch to the line chart, the formation too resembles the letter V. Now these two key levels, the A-shape and the V-shaped key level that we have considered, forms the foundation for the other key levels that we'll learn later in this series. So it is important that you understand them well. So before we move on to the remaining key levels, let us look at some live chart examples and see how price reacts when it interacts with these key levels. Let's see. So here we are on the Euro Canadian dollar daily chart, and let's see how price interacts with the key levels. And what do we see? I notice here that price was rejecting a key level, and after rejecting that key level, price has moved for about 79 pips. And now look at this example. Here we notice that price also rejects this key level, and so when price rejected that key level, we notice that price was able to drop some there's a massive drop, and price dropped for about 500 pips. Just pretty amazing. These levels really takes price down or up once you're able to identify and trade them correctly. Here's another example. We notice here that price rejected this key level. This is our classic support, or what we call the V-shaped key level, and price moves for about 280 pips from that key level. In this other example, you notice here that price rejected this classic resistance or A-shaped key level, and as soon as price rejected that key level, price was able to move down for some 240 pips. Here in this other example, price rejected from this classic A-shaped key level or resistance line, and after that we saw that price was able to drop down for some let's say price moved for about 157 pips before it reverses. And we continue, you see further examples. In this example, this was a classic V-shaped key level, and price was able to reject it and move up for about 240 pips. In this other example, you would see that price rejected this classic resistance key level or the A-shaped key level as we have discussed, and then price dropped massively. I was able to make a drop of about 319 pips. And if you continue, you see more and more example of price rejecting these key levels. Look at this example. Price was rejecting a classic V-shaped key level or a support level, and then price rallied up for some 300 and something pips or more. And this is about if we continue, it's about 500 pips before price started dropping back again. So if you continue, you see further examples. So what you're going to do, you're going to go to your charts on the daily time frame and mark these key levels, identify them, notice how price reacts to them in the other pairs that we're going to consider. Maybe you can use gold or euro USD, and then send me your charts in the comment or via my WhatsApp or Telegram handle, so I can check if you mark them correctly and then give some correction if needed. Clearly, as we have seen, these key levels are incredibly powerful, and trust me, the best is yet to come. So tell me, what do you think about these key levels? Do you believe that they are as powerful as the examples suggest? I'd love to hear your thoughts in the comment section below. If you'd like me to release part 2 within the next 48 hours, let me know in the comment section as well. That's all for today's video. So if you have learned something valuable from part 1 of this series, make sure to like the video, subscribe to the channel, and turn on notifications so that you don't miss the next episode. Your support and engagement motivates me to continue creating and releasing these videos as quickly as possible. Thank you for watching, and I'll see you in the next one.